Good morning. I'm going to talk about why it's not always the best idea to hold through big corrections, and talk a little bit about risk and profit strategies when you want to invest into a new coin. So there are different investment strategies, like for example long-term holds where you just buy into it and then you just let it be. But I think it's always good if you want to invest into a new project that you look during the first weeks, months, how the growth is of the coin, and if it starts taking a dip, to think about selling it if it goes below a certain point. And I'm going to explain to you why right now. So here I've got this spreadsheet with the correction percentage, the value in US dollar, and the rise in percent. So let's take an easy example. Last December you heard about Bitcoin, you wanted to invest and you bought in a whopping 19,000, you bought a whole Bitcoin. So let's say the project started, well, the Bitcoin started losing value, like 10%, 20%, 30%. I think at the end of December it was around 13,000, 14,000. So basically already a 40% loss on your initial investment. And that's not good. You should, like, the holding strategy is not always the best option. So another example is if, like for example, Cardano is now at 16 cents, and let's say you also bought sometime around December, maybe it was around $1.20. So 16 cents is around 85% correction, and at an 85% correction you need around 400 to 500% rise, so they just get your initial value back, and that's a lot. It's a lot. And so now we're going to quick look at risk and profit taken, and why it's important that you manage your risk when you're investing in new projects. So I'm on TradingView here, and let's see. So let's say that you want to buy into, let's get to this. All right. Select 4-hour time frame, and I'll remove the 4 EMA. All right. Let's see. Alright, so basically, like with the risk profit taking strategy, if you don't want to be trading, you just really want to look at the risk aspect and not really the profit taking, just the risk aspect. And you want to put in mind that you say, okay, I'm going to invest in this project, and if it goes below a certain threshold, then I will sell it. So here you've got Cardano and you want to buy in a 2,800 sats, and here this is a great tool. So we taking a long position. It's not a leverage long, just a normal long position, because you're buying in with the expectation that the price will go up later on. So we can ignore more or less the profit aspect, but you can, for example, here you can move this around and let's put it to 20%. So basically what this means is you buy in. So if it goes down a little bit and it goes back up, it doesn't matter, you're not selling. So the only point that you will sell, and then you just have to, this is not easy on a psychological level. If it goes, for example, below 2,100 sats, you sell the project no matter what. If it goes back up again, you can think about buying in, but you still have to look at different variables, different signals and so on, that might indicate that the price might go even more down, but we will get into that in another video. So example, so you bought in here. Now let's do the replay. and the price goes up. It's a bit slow. And okay, so you've made a great profit. Now you can, on a later step, you can think about taking profits on the way up and selling on the way down, so that you don't end up with a minus 80%, minus 70% loss on your complete portfolio. Now let's look at a different option where things go south. Let's see. Alright, let's take that. Looks like a good step. Alright, so alright, now after this high, it dips down and then you feel like this is the bottom, so you want to buy into Cardano and keep it long term. Now keeping long term is a good thing, but you want to make sure that you don't lose a large portion of your investment. Like, the longer you've got it, if you bought in a very low price, and the chances are that it goes below your purchasing price is low. But if the project has been around for a while and it's already risen quite a lot, then the chance is higher that it sinks. So we do the same thing. We select on the left side the long position, and here, okay, I mean a 5-to-1 ratio is quite good. So we go to 20%. So basically, if the price of Cardano in sats goes below 4,400 sats, you sell Cardano no matter what. And that's important. That's the hardest part of it, actually selling, because on a psychological level you will think the project is going to back up, but that's difficult to actually then take action and just sell it. And this is mostly for new projects that you're investing in. So for example, you want to invest into Oysterpub because you heard there was an airdrop, or you want to buy into POA. And yeah, so when you think about buying into a new project, you should mentally set a stop limit. You don't have to set an automatic one. And if the project goes below that price, then you can sell it. And if it goes back above the price that you sold, you can say, okay, it goes up a few percent above, then you can buy back in. But I suggest looking at different trading signals to see if there are any signals that show that there will be an uptrend. So if we play this out, we set our 20% risk, we press play, and it goes up. That's good. We leave it, and it starts going sideways. That's fine. We just leave it. We're looking at everything else, and starts to go down. Ooh. All right. So here it went way below the 20. Now you see there's quite a long downtrend. If we look at the for EMA, we had a cross here, but we will look at this on another video. So basically this would have been a good opportunity to sell, because you can also just sell when it crosses, but this is just for new projects. So here you would have sold, you would have made 20% loss on your initial investment. But let's look what happened if you had kept the project and just kept, and we know what happened. It just dips and continues dipping, and you think it's going to go back up, but it's not. It's just going down and down and down. And the thing is, it's great when an investment goes up many 100%, but if you look at here, if we look at this again, minus 90% correction means over 900% rise, and that's a lot. And after this 900% rise, you didn't actually make any money. You just got back your initial investment into that project. So I think that's one reason why it's important to take into consideration, like I like to look at the more or less 20%, 10 to 20% risk. So if a new project I'm investing into goes below 20% of my investment, I sell it. And I also look that when it goes up beyond a certain percentage, that I've got a good profit risk ratio, that I also sell a part, not everything, but I sell on the way up and I sell on the way down. No, sorry, I buy on the way down. And another thing, now that many projects have lost a lot of valuation, BTC valuation and US dollar valuation, it's a good idea to look at the different projects, and it's probably one of the better times now to start looking at new projects with a lot of growth potential. But I still suggest that you use this strategy and not just blindly invest into a project and hope that it goes up, and when it goes down you just hold. Like, this hold mentality is not always the best option. And as a last thing, check out CoinCheckup. I enjoy this site a lot. They've got a lot of great futures. It's not sponsored, but for example, many people that have been in this space for a longer period of time, they might have start getting fed up of just seeing red. But if you've got the 200-day growth, then many coins will still be in the green, and there's not many other investment opportunities around where your money goes up that much. So hope you learned something from this video, and see you on the next one.